We are live. I am live. Welcome to the Noblewood Show. We're gonna have some fun today. We're going to cover a lot. I'm gonna cover a lot in a short amount of time. I meant to get this done earlier. I know today was a wild day. Market was down. We rallied by the end of the day. Oh my goodness, it was gloom and doom. It was everything. It was everything you could ask for all in one day. Now, it was also though just one day. It was just one day. 3 years from now, today ain't gonna matter. 2 months from now, you're gonna forget about today. 5 years from now, nobody's gonna care about today. So I want to have a healthy conversation with you guys and really dig into, just these mechanics. Could you have predicted? I hate to use the word predicted. My students know how I am about predicted because it sounds so like mystical, predict the future. No. Could you have seen the setup and the pattern that led to today? Yes. Could you have seen it weeks ago? Yes. The last 7 days, the Dow has dropped. We've dropped. I'm gonna pull it up in a second. NASDAQ, everything. We dropped 7 days in a row. Could you have been in the market before you hopped in today? Or Friday, you jumped in at the close trying to trade some options. Or maybe today at the end of the day, you tried to go long. You bought some calls. Could you have seen this whole move down coming and capitalized on it? Yes. Too many of us, too many of y'all, let me take that back. Too many of y'all, and I used to be one of you when I first started trading. I was so now. Everything was now. What's happening right now, real time. And there really is a flow and a patience to this thing where once you kind of get how it works and you get some confidence under your belt and truly some patience, you can see everything that's coming before it happens. You really can. Now, as a caveat, I'll say I don't know what's going to happen tomorrow. I don't know where the market is going to be a week from now. But there's only 2, maybe 3 things that can happen. All right. So let me do this real quick. I got a few people on. So this is like live, it's interactive. I'm actually on YouTube for the first time too. I should have been on YouTube and killing YouTube. All these fake me's out here. Some of these people that y'all know and watch, I literally taught. It's a dirty game, and they'll never mention my name. Oh, it's a dirty game, but I'm coming for you. I'm coming for everybody. I am, because I've been passionate about teaching and trading for 10, 11 years. Been doing this way before COVID. Millions of people just started paying attention to the market because of COVID, because a global pandemic set your butt down and made you think about maybe I should be investing in trading. All right, you should have been serious a lot before, but it's cool. You're here now, so I just want to help. All right, so this is live and it's interactive. By interactive, what do I mean? I can pull up people's comments. She said, "Hi there, hi there. How you doing?" She said, "What do I buy, Noble? What do I buy?" I don't know. I don't know what you should buy because I don't know what you know. I don't know how disciplined you are. I don't know how much money you have. I don't know if you're talking long term, you're talking short term. I don't know. It's a ton of questions, right? So I really want to take some time today methodically to walk through a few things and show you that everything that happened this past 7 days, predictable. No, I said I wasn't gonna say predictable. You could have gotten in front of it. So this next move that happens, you can get in front of that too. But y'all got to get educated. I'm an educator. Yes, I sell classes. Yes, it's something I love doing. I was doing years before. All right, so it is what it is. I'm good at what I do. I'm passionate about it. I could care less when people try to put me in the, oh, why do you charge? Because I love teaching and I'm better at teaching and breaking this stuff down than most of the people y'all follow. Right. So I ain't gonna, I don't want to have to go through a whole long spiel on that. I will say trading has so many more finite, more nuances to it. So even a question like that, what do I buy? Think about the simplicity of that. What do I buy? I could be like, okay, you should buy this, or I could give you 3 or 4 things. But I honestly feel like the more I learn, the more I work with people doing one-on-one consults, classes, working with kids. I tend to do more stuff with kids in the summertime, which makes sense because they're off, right? They have more time to really dig into this stuff. It's really not a one answer fits all. So hopefully you'll get that from me today. You'll see me slowly going through and giving different perspectives. There's a long-term investor perspective. And she said long term. All right. Okay, cool. She said, that's why I only listen to you. I love that. I appreciate that. Appreciate that. Somebody tagged Nate Gray. I don't know who Nate Gray is, or what up, Nate Gray? Somebody tagged Andre Green. What up, Dre Green? Miss Martin, I know her. She says, I want to know how to get started. I want to teach this to my 16-year-old son. I want to, not want to, I am going to this summer. Y'all keep me accountable. I'm putting it out there because when you put something out there, you got to do it once you start. All right. Or at least I do. That's my way of making sure I do it. I want to do a really dope options class for kids in high school. 16, 17, up somewhere in there. They're making money. The math is not crazy math. If you can get on TikTok, they can figure out TikTok, right? With me, with my help, with coaching and guidance, they can learn options. So we'd love to help there. Jason Hall, what's up? Oh, somebody tagged Jason Hall. Yeah, what's up, Jason Hall? Penny, my homegirl Penny. IU, Indiana University alumni. One of the best B schools in the country, boy. I got an MBA. It's a lot of these trader people out here. They didn't learn from somebody, and now they didn't created a brand, okay, cool, whatever. All right. Okay. Somebody said I'm gonna have to take your course. Yeah, I think it'll be a good investment. I'm having a lot of fun. I'm having a time of my life. I really am. I love what I do, and I'm taking it up this year. So new podcasts coming. You're gonna see new images, more video. You're gonna see some ads on Facebook, IG, YouTube. I got a lot more stuff. T-shirts, brand, some merch coming. So anyway, okay. She said he has a job and loves to save his money. He needs to know how to invest it. Yes. If he knows how to save, if he loves saving, oh, you know what I could do with a young man who loves saving? Oh. And I know your son, so yeah. Okay, so let's do this. I got to pull up some charts. Thank you guys for joining me. Let me get this out the way. So I want to start here. Now I know some of you guys. Here's the tough part. Every time I do these lives, I gotta show you what we're talking about. So I know for some of you guys, you're like, Noble, as soon as you pulled up this chart, you lost me because I have no idea how to read these charts. Okay. So a part of that, and I want to make this point, a part of becoming walking into the culture of investing. Right, investing is a culture. Same way hip hop is a culture. Everybody's not a part of hip hop. It's certain terms, certain aesthetics, certain looks, certain things that like are a part of the culture that some people outside of the culture do not understand. It's the same with investing, right? So this is one of those. It's tough if you're new, but I got to go here. I got to dive into the charts. I want to talk about some things. I'll try to make it as clear as possible, but and it's really just think of everything as market going up or down. So on this chart, what I want to show you in a real simplified fashion is all of these charts, these candles. You don't have to worry about all I want you to worry about is the color. Blue essentially is an indicator that I'm using. It's called a TTM trend. Multi-million-dollar trader John Carter, great book, Mastering the Trade. Love that book. I use a lot of his indicators. Actually, I used them years before I read the book, and then I realized I had learned all the stuff he taught in the book. I could have wrote the book. It's crazy. So these blue candles represent an uptrend. Price can only do three things: go up, down, or range. And even when we're ranging, we're slowly building momentum. We're about to go down or up, even when we go sideways, even when we range. All right. The green candles basically represent days where the market, right, price was coming down. Right. So that's pretty much the simplicity of the candles, right? I have on here for my people who are slightly a little bit more technical. All I have on my chart, I'm not gonna get complex. I'm not gonna get all, and honestly, you don't have to get complex. Really, the mastery of trading comes with really simple tools used over time. Right. If you learn how to bake an amazing cake or saute veggies, 20 years from now, you still gonna saute veggies the same way, right? You probably will have a little more, right? It's really the same basics over time. You're so confident with them. You know it so much better, but it's the same simple stuff from day one. Right. So that really is, I think, a key thing about trading people miss. We look for it to be complex and we search and we take all these classes. We always looking for the newest. It's like, you probably should just keep it simple. Right. And you can only simplify something when you truly mastered it. Right. So the blue line is an 8-period exponential moving average. For those who are like, what the heck is that? All it is pretend you were looking at LeBron's. He might not be the best person right now. Pretend you were looking at who's scoring a lot. Curry. Pretend you were looking at Steph Curry's average 8 points per game. His 8-point per game average. All right. Right in here, his points above this blue line just simply means over the last 8 games, he's been on fire. Every single game. He's going higher and higher. All right here. Okay, little dip. All right, so it's the same thing. Prices, scores, all of this is just reading data. It's reading prices. It's reading information. It's reading numbers in a visual picture that we can use to make a lot of money and change our lives. Right. So that's the 8-period exponential moving average. Is really key. And then this yellow line is a 21. So all I'm using is an 8 and a 21. 8 and a 21. Why? They both simply help me to make sure I'm getting the trend direction right. I don't care what it is you buying. If the thing is going down and you're buying it, right? If you get the direction wrong, it's gonna be tough. It's gonna be tough, and I hate to even do it. But I'm gonna pull up Peloton real quick. I'm gonna pull up Peloton on the month chart. These are month charts. Say goodbye to Peloton. Peloton March of 2020 was $17.17. It went all the way up to 171. That's a multiple of 10. It's 1,000% return in a very short amount of time. And it since then has dropped from 171 all the way back down to $23. Say goodbye. And I don't mean say goodbye like the stock is just trash now. No, I'm not saying that. I am saying I don't know if you should have invested in it because it didn't have enough time and information to prove anything, right? So let me get off Peloton. I don't want to beat up on Peloton. Let's do this. Let's jump to NASDAQ. And I wrote down, I took some notes before I did this. I'm gonna tell you what I'm covering now, and then I'm gonna cover it, and I'm gonna give you guys a chance to ask some questions, and yeah, we're gonna have some fun. I might even hit a few of your stocks that you want me to cover. Kind of take a quick look at those before we get off. So here's what I'm gonna do. I want to look at NASDAQ. I want to start with the week chart. Why do I start with the week chart? Because a lot of y'all, I do this all the time. And I'm going to say a lot of y'all a lot because I talk to a lot of people. Insider Trading is a room. It's a group on Facebook. Myself and my cousin Joe Harrison started. Some of you guys may know about it. Some of you may not. Amazing place to get educated. Affordable courses with me and him. Lots of live stuff like this. We teaching for free. Somebody the other day asked me, like, why do you charge people to teach what's needed so badly? I was like, what? Don't you pay for everything else you need in life? So the thing I love doing is supposed to be free. Anyway, hold on, let me get off that. Oh no, people. So I talk to a lot of people. It's like 28,000 people in our group. I've helped to teach thousands. Free information, some paid. I don't care who you learn from. I just care about you changing your life and learning how important this market is because it's something that we don't teach in schools and colleges. And I know because I have an MBA from Clark, Atlanta, and I was making 6 figures in Bank of America and one of the best MBA programs across the country when I came out in 2008. And I really didn't know too much about trading or investing because it's not taught even for masters in business. All right. So we're gonna start with NASDAQ. And I'm gonna just flow. We're gonna talk about NASDAQ. I want to show you how you could have you could have been in front of these last 7 days. It made sense that we came down for 7 days. If you just knew what to look for and were patient. Patience. Because this is a skill and it's not something you develop overnight. All right. So let's start with NASDAQ. So right here, this month, to cover quickly, this month right here, I always do this. It's what what is called a top-down analysis, right? You want to start with the bigger picture. So I'm starting on the month chart. All right, month chart. This was COVID way back here. All right, COVID came down. We didn't know what was happening. It was like, oh my goodness, how bad is this thing going to be? If I go back a little bit before COVID, let me actually show you what happened before COVID. So a year before COVID, price came down, bounced off the 20. Right? Price went up, came back down. Looks like we hit 170 slowly over about 5-6 months, went back up. The NASDAQ, which is 100, it's literally one of the best ETFs. Consider it like an album, right? If this was music, it's an album with 100 of the best artists, period, in the world, right? As a metaphor, that's what NASDAQ is, right? It's 100 stocks. It's all your big players: Tesla, Apple, Microsoft, Google. It's the biggest and best in the world. Over the last 10, 12 years, the average investor, even the best investors, can't beat NASDAQ year after year. So it's super solid. I always start with NASDAQ because it is super solid. And I want to teach even just by using it as an example, right? So went all the way up to 240. This was before COVID. And then boom, COVID dropped us from 240 down to 164. Right. So this was COVID a couple years back, right? Big drop, big scare. Oh my goodness, how bad is it going to be? The NASDAQ dropped basically 31%. And since then, after that 31% dip, the market has recovered pretty well. Right. So from those lows to these highs at 408, we went up about 150%. All right. So look at that pattern. This basic pattern is the pattern that you need to know. It is the fundamental basic pattern you will see on any and everything if you do this the right way. You want to buy things when they're low, and you want to get in so that when they go higher and higher and more people buy, more people hear about it, and more buy and more buy and more buy, guess what? You're making money because you got the trend direction right. Right? Got to get the trend direction right. So I'm going to take this stuff off my chart real quick, and I'm going to just hop to the week. So clearly, right, we've had a really monstrous 22, 23 months. NASDAQ has been hitting new highs every other month. It's been like the best 2 years. I keep saying it. If we literally go back over the last 20, 30 some years, like look at this trend, right? That trend I just drew, I'll even connect it to where we are right now. Look at that trend compared to all of this, which was like the last, this was since the recession. You had a nice little pop back here way back here, 1999. Downtrend, 2000, right? So that was the dot-com bubble bursting, right? We had a decent market for about a good 03 to 08. 2008, recession. Terribly bad. Bottom of the recession. Hopefully you didn't get shook out and beat up because of the recession. Then the recession, post-recession from 2009 to 2020 gave us 11 great years. But these last two, you can look at it and see for yourself. The trend is higher, is steeper. It's literally been the best 2 years of our entire lives to be an investor. Market's been going straight up. It literally has. This month is finally like, okay. And then where did we come back to? NASDAQ almost has come right back to this little line, which is a 20-period moving average. Why do I always keep my 20-period moving average on here? Because there's a statistical concept called regression to the mean. All it means is you could take prices, grades, you could take anything that we can track over time with, that's numerical, right? There's a statistical concept. It's not something I created. It's a statistical thing that just happens. It's real. Where price will go higher, LeBron's Curry's points, his average will go higher, but it always comes back to the average. Price will always come back to the average. Weather temperature. We can have crazy hot, hot summers, really cold, but we're going to always come back to the average. Right? So we're almost there. This move back down to this little yellow line, very predictable. Happens cyclical. You should expect it. You should know. I've been knowing this was coming all of these months. It's like eventually, yeah, this trend has been amazing. But guess what? We're going to pull back to this little yellow line because it happens all the time on everything, right? So let's go to the week. So here's the thing. Oh, my Thinkorswim has been acting a little weird lately. I think it's freezing up on y'all just a little bit. Let me double check something real quick. I got some comments. Miss Martin said, "Come get him." Bianca said, "Yay, what up, Bianca?" Teach. I'm gonna try. Oh, she added Dawn. Yep. Apple. Yeah, I'm looking at Apple. Them other charts 3 times more. Yeah. And you can't ask me. Yeah, I know. Oh, I know. Oh, don't let me get started on all that stuff. I know there's a reason you can't ask them anything. There's a reason. Because anyway, let me stop. Let me stop messing with the fake gurus who can't answer questions. Who are real great at branding. They ain't good at asking questions on the fly though. Get mad if you ask them something on the fly. Okay. So. I just want to double check something real quick because my Thinkorswim has been I don't know, it's been like doing these little freezes. So if it freezes and I catch it, I'll just kind of pause and catch myself and then make sure because I don't want y'all to miss this. So check this out. So this is the week chart. This entire 1, 2, 3, the last 4 weeks. All right. This move, these last bad 7 days. Let me show you the 7 days real quick, right? So this right here, 1, 2, 3, 4. This 1, 2, 3, 4, 5, 6, like this right here. Was this I keep saying predictable. I don't want to say that. could you have profited on this down move? Yeah. So let's walk through it slowly. How to have been there before it happens. Because a lot of people don't believe. Like people like me do this and we talk about what happened in the past and you're like, yeah, but you're going back showing what happened. Yeah, but I can also tell you what's going to happen next as well, because every time the market reverses from an uptrend to a downtrend and downtrend back to uptrend, we do the same basic mathematical functional things. It's just people, I don't know, I guess they think all this stuff is just guessing or something. I don't know what people think it is. It's very organized. It's very structured. So I'm gonna walk you through it. So if we go here was the week. This was the really, really tough week. Market has hit new highs, NASDAQ 408. We pull back to the 20 on the week, which is normal. All right. That's cyclical. It's normal. If you pay attention, check this out. Every time NASDAQ, pretty much this entire time up until this time, we came pulled down to touch the 20. What happened? Price went right back up. That's a very, very bullish, easy to trade stock. And this is NASDAQ. All right. So this is 100. It's an aggregate of 100 of the best stocks. Right. So once again, all right, this was COVID. Really bad. We went under the 20, under these 2 lines. Whenever they crossed, that's like, something bad is happening. We came right back up. Right. They crossed back on the positive side. Both of these moving averages, as long as this little blue one is above the yellow, it's a bullish market. That's it. That's all you really want. That's all you can ask for. At worst, if you're in something that's really bullish, we're gonna pull back to the 20. We kept going. We pull back to the 20. We pop back up to the high. We pull back to the 20. We pop back up again. Oh, it did that freeze. Okay. We pull back to the 20 here. All right. Weeks of new highs. Pull back to the 20 here. All right. So very cyclical stuff. So up here though, what happened starting in 11/22, November 22nd, that week, we pulled down to the 20, but here's where things got tricky. Just because what they tell you, past performance is not indicative of, that little disclaimer. All right, so here's where the market got tough. We pulled back to the 20. And for these 3 weeks right here, 1, 2, 3, 4 weeks, this entire month, price didn't go anywhere. We got as high as 401. We came back down to 378. We tried to get back up. And then this week right here, This was a very, very, very telling candle. This one little candle told you a ton of information. Why? Because with some time and experience with this stuff, you should have known, okay, we're in a range. We pulled back to the 20. We tried to get back up. We actually went higher, right? So the market loves to range and go sideways, and then we'll get higher. That's all it is. It's almost like when prices do this. Imagine this being like somebody who's like, I don't know what I want to eat, right? And I'm like, you want pizza? You like, nah. I'm like, okay, you want Italian? You like, yeah, maybe, no, I don't want Italian. I'm like, okay, you want barbecue? You like, nah, right? We're literally not moving anywhere. We're not decision making. It's the same basic kind of principle, right? Markets get stuck when prices get stuck when investors, traders kind of get stuck. They don't really know if they want to invest and put a lot of volume into their trades. Volume is what stipulates or what directs, makes stuff move. You need volume. You need people buying. When I'm confused and she's confused and he's confused, and I'm like, I don't know. I don't know. And we're not buying, guess what? We're making these ranges happen. Now, when I say we, I really am not talking about me and you as retail traders, people who can just put their own money into an account and start trading tomorrow, right? The market is moved by thousands upon millions of shares, institutions, banks, hedge funds, right? So we just trying to copy the moves, right? We're trying to think like them, right, to understand prices, but so range. Really critical week. Why? Because we broke outside of the range. We did get above it. We finally started moving. And anybody who would be honest will say we should have ran right back to the highs, right? When we got to 404 with the old high of 408 and we couldn't get to 408, but we went to 404. This week right here, telling. It literally gave you like, it was just basically predicting that the market was going to go back down. Right. So let's do this. If I put the box here, I call these trade boxes because this literally is like, it's a box that represents a trade by itself. If you know how to buy puts, if you had made money on, right? Because I try to tell people in bullish markets, just stay on the call side. We start talking about options. Just stay buying. Don't be trying to short stuff and buy puts and do all this advanced stuff. You don't really know how to do that well. All right. So if you have made money, you've been doing really well. This is a type of week where just getting in, if price breaks under that week, I would have screamed until I'd have been like, yeah, if we come down, we're probably going to run right back down to the same low. Why? Because we tried to break out. We tried to go higher and we didn't have enough people. We didn't have enough buyers. When you don't have enough buyers, markets cannot go up. So we dropped. We came right back to where it only made sense that we would come to. This is called a support price. Right? It's just the same place price went the last month. We kept bouncing off of 380. All right, so we went right back down to 380. So let me flip to the day chart for a second. Okay. So here's where this gets fun. This is that week. This is that, right? That week, those 5 days that I showed you on the week chart where it was up here. Price came down, right? We hit this same area of about 380. We had the 200 period moving average down here. That's the only other line I didn't tell you about. It's a huge buy signal. Folks love to trade off the 200. Why? Because any company, any stock that's healthy will be above its 200. Price will come down, touch it, and kind of range for a while, go right back up. It's like it's almost like a line that just very instantly, easily helps you to understand if a stock is really bullish and performing well, or if it's not doing too well. Right? Is it above the 200 or below? All right. So if I look at NASDAQ and we go back, look at that. Even if I go back some years before COVID, all right, really strong dip, we got back above it, and then what happened? We came right back to it. Got above it right here. We pulled back to it, got way above it, and then we made this move right back down. This was COVID. COVID got really bad right in here. Right in here, COVID was really pushing us. Stay under the 200, but didn't stay there too long, and then that was pretty much it. We've been above the 200. Ooh, this thing is starting to freeze a lot. Ugh. I apologize for all this freezing that's happening. I can't control it. I don't know what it is. Why it's doing that. So this move down to the 200 should have been expected, right? And you should have expected it because of this week. After all of the right, so you got to think about it. As a trader, you're building a story, right? I didn't know. Nobody knew back here what would happen, but every day adds another little piece of the story, right? That was the week we didn't go anywhere, right? Came down very fast, right back to 380. Predict a pattern, seeable, a pattern that was so recognizable, right? All you can do is make decisions based on the pattern, right? Oh man, this thing is starting to really get on my nerves. Oh, I gotta call Thinkorswim in the morning. Um, so I'm gonna get rid of this line here. We got to 380, and then we had a hammer. Interestingly, this little candle alone represents, ooh, it was like a day where bears are pushing the market down, but by the end, bulls kind of rally back. All right, so both of these are hammers. All right, this was a hammer at a support level. Small pushback up, but because we are in a range that we were in a ranging 4 weeks where Nasdaq could not get any higher. We tried to break out, still could not get any higher. We ran right back down to the same lows, not touching the 200, still couldn't get any higher. This little indicator here, I know you probably don't know too much about it, but trust me, it's amazing. It's a gem. It's called a TTM trend. I got 4 green candles. Getting those 4 green candles is telling me the trend is changing. All you want to do is literally buy low and sell high. So what would sell high look like? When the market went back up here to test this 8 and this 20, right there. If we came down back under this day right here, the market was telling you technical analysis, not super complicated. It may be depending on, where you are and how much you know listening to me, right now where you are. But all of this stuff, once again, very much so patterns that you can see and that you can recognize and be in front of them. Why? Because if price was going to go back up, then cool, price could have went back up here. I don't know. All right, we could have had a big day and shot straight back up. Cool. But what you got to learn about prices is people, when we start to break the highs and lows of certain days, that's where people literally they're buying and getting their orders. So if you bought here and then it pushed up for 2 days, guess what? As soon as it came back into that same area, you're going to do what? You're going to get out. You're going to get out. So any bulls who bought above this day, yeah, you had 2 days and price came right back down. And you already knew, you should have already known because everything was giving you several signals. The TTM trend was down. Price was under both of our moving averages. You had the 200 to come down too. You had the week chart that literally tried to break out and could not break out. That's like 4 or 5 different reasons to believe that the market had more technical price action based reason to go lower before these last 7 days. So this to me right here, this was a critical day. This is what I teach in my options class. There's nobody who took my last options class who should be able to look at this chart and not be like, yep, he taught us that. John Carter gave us 4. If I add the squeeze, I didn't put the squeeze on here. This was the day. This was like the critical day. I've learned to be like super precise. This was the day, the 12th. Everything after this, lower, 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 low. And these 2 days were actually like this was just extra money. Why? Because you should have known we would at least just come back to the same low. And if it got there, right, so it's coming back to the 200. But the entry, the really great entry that you needed was here. And this would have been 7 very easy, comfortable, simple days. You wouldn't even care how bad today was. Why? Because you would have already been in going that direction. Right now, you could have said, okay, you know what? I made some really great money. I'm kind of talking to my options traders. Today, now you could be like, okay, got a hammer. We break this hammer. I'm going to get out. Or you've already taken profit. All right. Maybe you got a few contracts just still running because It's been such an amazing 7 days directly, but this entire move down, very much so something you could have seen beforehand. The story, as I tell the story of this, of where we are today, started months ago. Part of the problem is people who are trading are looking at way too many different things. All right. So it's hard to really get a story if one day you're looking at Apple, right? You're like, oh shoot, same day on Apple, January 12th. It was literally the same day, right? I showed you NASDAQ. Why? Because if NASDAQ did it, it probably looks the exact same on all your favorite stocks anyway. Right. So that's that day of 112. That was that key day, right? January 12th. If I hop over to Tesla, let me take all this stuff off my trash real quick with Tesla. Where's the 12th? 12th is right here. Technicals are a little bit different. Tesla wasn't as clean, I would say, but I would say right here, that was it. So 1, 2, 3, 4, these last 4 days, simple, clean. Yeah. And once again, if you're in my options class, or you took in your mind, especially this last one, this candle right here, you already know that's the candle. That was my trigger. But it never gave me the signal to get in. And if it's not going up, when NASDAQ is falling, when Apple is falling, all right, I go to AMD. AMD, where's the 12th? Let me take all this off my chart real quick. So we did that same thing. 1, 2, 3, 4 candles down right here. The John Carter, the TTM trend is saying, yo, I'm down. We're under both moving averages. We pull up to test the 20. If we get under this day, this is the day right here. This is the day. That's why I always draw these trade boxes, right? Because you got to be able to see where people are going to get in and out. This was the day. Could we get under this day? We tried to push back up. We came right back to it. We finally broke through. And it was a very nice, smooth, fast, hard falling, easy, profitable, highly probable trade on AMD. All right. So let me do this for a second. I know I started with the month. I just want to show you this really quick too. So if we go back to NASDAQ has almost made that regression to the mean. All right, that pull back to the 20. All right, so what happens when we get there? Well, normally when we get there, we get a ton of buyers. Right. But every chart's different. Every year is different. So I want to show you something. Let's look at a little bit of past, right? The historical data. All right, let's take a look at this. Let's look back here. All right, this was 2011. Market at new highs up here. All right. We pulled back to the 20. We bounced. We came back up. We came back down. So for 1, 2, 3, 4, 5, 6 months, price really didn't go anywhere. And then we got this really nice breakout. 3 months of nothing but easy money. But it came after 4 or 5 months of going nowhere, right? So what's my point? Everybody's like, what should I do? What's coming? What's about to happen? All right, look at this one. This one right here. Check this one out. Pull it back to the 20. Same thing's happening right now. We made that move down back to the 20. Push back up. And then we didn't get it like a crazy volatile market here, but we slowly went up every month. A little bit higher, right? So the market recovered. Right. So sometimes, what's my point? Sometimes the market will test this 20 and the recovery, buyers will step right back in and we were right back to new highs. You'll be like, oh, you won't even remember this month, this 7 bad days, or if it lasts another month, like, you won't even remember it because the market will be at new highs, right? You won't even remember it. But then we also have times like this where for 5, 6 months, the market doesn't go anywhere. All right. And these ranges happen. Look at this really strong, ugly month. This was back in 2015. Look how long it took us to get above this one ugly month right here. Look how long it took us to actually really break above that month and start moving. It almost took like a whole year for price to really take off again. Right. This thing keeps freezing. Why are you freezing so much, Thinkorswim? Not letting me be great right now. So this was COVID. COVID was pretty fast as well. It was 1 month down. We broke the 20. We came right back up and new high, new high, new high, new high, new high. We pushed. Right. So this month right now, what you're experiencing, very normal, cyclical. It happens. It'll always happen. Right. And the same thing here. Before we can really get back to new highs and get back to loving the market and all that stuff, guess what? This same big ugly candle that you're looking at now, this month right here, I'm going to do and think the same thing, right? To get all of these sellers out of the market, guess what? Price needs to get back above this candle. That may happen next month. I don't know. It may take 2 months. I don't know. We may go lower. I don't know. Right. But I do know the patterns are very cyclical. The patterns, right? And let me give you this as a freebie. As a freebie for my people who are really dialed in and trying to get some technical skill from all of this. Let's do this. NASDAQ. Yeah, I'm gonna use NASDAQ. I'm gonna stay on NASDAQ. I'm gonna go to the week chart. I'll do that. I'll go to NASDAQ week chart. What happened the last time price was under both moving averages? Matter of fact, let me take this off and I'm gonna add. So I added one more thing to the bottom of my chart. This is called a Ttm Squeeze. Really dope indicator. Look it up, Google it. All I need you to know right now is red is down, blue is up. All right. So I told you where we are today in retrospect to like where we've been, right, with these patterns. So the question you should have right now is, when was the last time what we're experiencing right now happened? Just to kind of give us, not that it's going to happen again and repeat perfectly, but just to give us some guidelines, right? Because these are all just patterns. Once again, price can do nothing but go up or down or range. And then we start to go back up or go back down. Then we reverse and we go the other direction. That's literally all price is doing, right? That's literally all it's doing. So the last time we were under both moving averages and you saw red bars on this squeeze, this indicator down here, which is a very, very smart indicator helping you to understand volatility. The last time it was back here. It was during COVID, right? Now, what happened after we got that first red bar? We really didn't go any lower. We tried to test the bottom of that, but we got a second red bar, a third, a fourth, and then it started turning yellow. And what is yellow? Yellow means that the volatility that came in, all of those sellers are slowly getting out. Oh, so this indicator goes from red to yellow back to blue, which is why my candles are like color coordinated. I like to have these two, right? So everything's kind of matching up. Blue down here, blue up here. It's like, yo, everything's good. All right. So here's what I can say. Every time we have a downtrend, before the market can go up, guess what it'll do? Every single time. This little blue line, you're going to have a candle that closes above it. Before we can get into this really strong trend here, you're going to get this as a little, all of this down, down, down. And then we're finally like, okay, cool. We can breathe. We can start going the other direction. And we may go that direction for literally years. Right. So everybody's guessing. Is this a dip? Is this something more cyclical? Fed chairman is going to be talking this week about interest rates. There's a ton of different things happening, right? Is the economy weak right now, or is the stock market just weak? And then, is it really just tech? Energy was. Are we having just like a big sector rotation? Was it where we just kind of too addicted to tech stocks and easy tech stock profits, and now trading's gonna get a little harder because you can't just rely on Apple and Microsoft to make you money and Tesla, although you still can because they're still the best stocks in the world. Somebody said you're doing a great job. It's freezing because you're so cold. Golly, that's hilarious. I love it. I'm gonna use that. That's why it's freezing. That really is why it's freezing. All right. I'm so cold. What you call that? Timberland beat pops into my head. similar beat with Omarion. Man, that's hilarious. Okay. Oh, somebody said, okay, thanks for coming on live for this day. Oh, you're the best. Nobel. It's noble. That's all right. I'll take Nobel because I know you meant well. Um, it always recovers. Yeah. I don't say always because I can show you some stocks that didn't recover. Millie blocks are definitely a volatile day. Yeah, definitely a volatile day. So let me show you guys this real quick too. So that's right. Longer term perspective. I would say relax. Right, long term. We're right now experiencing some down. Bears are having their way. If you knew more, yeah, what I just walked you through with those 7 days, you could have been in that entire move on Apple, AMD, Nvidia, right? It's kind of like the same trade on everything. All right. I do think there's that January 12th day that I showed you. If I go back to that real quick, I do think that literally this was the day. If it won't let me draw my box. There we go. Right. So this sell off here was really strong for a reason. Right. Y'all got to trust me. I think you do. But I know our stuff. I know what I'm talking about. Right. When we talk about price action, we're really talking about, can you look at a chart and read candle by candle every new piece of information? Can you add that to the story? And at the same time, understand, are bulls winning? Are bears winning? Who at what point, at what price is going to give up? That's all price action really is. And it takes a while to like fully get this stuff. Yeah, it takes time like anything else. I was just talking to a buddy of mine. We was talking about options. He was telling me about, he's talking to me about crypto. He was telling me about some crypto company, something he was investing in. Somebody, I was like, were you buying crypto? He was like, no, and he couldn't really explain it. And I said, that's problem number one. You invested in something you couldn't explain. All right. And then part number two, we were talking. He was like, they like invested his money in Bitcoin, and then they were like paying him a percentage every day or something. I was like, okay, so it sounds like it was some sort of amplified something. But you could just learn how to trade directly. You could just learn how to do this directly. I'm telling y'all, there are thousands right now of programs and scams and scammers. And here's the crazy part. The best scams look the most legit. They really do. That's the crazy part. The best scammers, hustlers look the most legit. I'm gonna give y'all some real quick 2-3 things you need to do. If there's some guru and you can't find any information and they just popped up out of nowhere, be cautious. You could go back and see my entire journey on Facebook. You'll see when I knew nothing about investing. You can see when I got my MBA and I started making a little bit of money and I got my little MBA and I was making 6 figures. You saw me posting charts. You saw me when I first started working with kids. You saw the first Limitless logo. You can literally see my whole journey. You can see the whole journey. Now, am I sitting here telling you I'm super rich and yada yada? No. I never try to brag on the money. For me, it was never even about that. Although it was, right? Yeah, of course it was. It's like I don't, do this to not make money. But my point is there's so many people and scams and stuff right now that are literally just taking advantage of people. So I talk about this stuff and I go on these little rants because I literally know people who have been like legit for real swindled. And I'm talking $400 to like $40,000 that they've paid for things. Then the people go ghost. They can't reach the person. They can't get a refund. And it's legit. It's real. And then also in our room, there's these bots and scammers, and it's a lot, man. It really is a lot. It's a very I don't know, the space itself. This allure or promise of being able to make your computer and your phone an ATM. Right. This takes years. You're never gonna hear me talk about how it happens overnight. It doesn't. It's like everything else. You got to put in the time. You got to have the community. You got to have the drive. When I got into trading 10 plus years ago, I literally made the decision 10 plus years ago that this was going to be something I was going to get and master. I didn't care how long it took me. 2, 5, 10, 20. I made a very sound decision. It wasn't about the money. It was about providing something that my mom and dad couldn't provide for me. passing down that knowledge, but also passing down some shares and some accounts and being able to leave something. So I go hard, and yeah, I do have fun talking about these fake gurus because it is a lot of them. It's a lot. It's a lot. But I also actually care about people because like I said, in the trading room that me and my cousin run, I get these stories. You know what I'm saying? I do consults. I only do like 3 a week now. I don't do a lot. I was doing a lot last year. I was doing like 2, 3 a day last year. But I've talked to so many people who literally have been scammed. It's crazy. It's crazy. So anyway, okay, so let's do this. Let me show you. I want to show you guys this reversal candle. So think about it like this for a second. Long term, NASDAQ long term. All it's been doing is bouncing off the 20 for literally since 2008, 2009. I'm gonna put little circles. We bounced off the 20 here, here, here. Oh, here. Let me make this go a little faster back here. Looks like right in there we got a little bounce. Y'all can't see. We got a bounce right there, and we got really close back there. All right, so that's NASDAQ. That's the long term. This is why long term investing is technically I say simple in the sense that it doesn't require a ton of emotional grit, other than to just agree that you're going to invest and build equity, right? So the same way you pay off your car every month, you pay off your house, you pay off anything, you put money into something to build value, to either reduce debt or in this case to create income and wealth. You just got to do it cyclically, monthly, right? You just want to buy every month. You do a consult with me, I'm telling you right now, if you don't know anything, all I'm going to do is tell you to buy NASDAQ. Why? Because there's there's statistics behind its performance. I'm literally recommending, if I just tell you to buy NASDAQ, I'm giving you, hands down, probably I would say the top. There's only one. There's one other one. There's really one other ETF that it just beats NASDAQ a little bit. It's about a little bit, but nobody really knows what's in it. When I talk to the people who are invested in it, they can't really tell me a lot about it. So yeah, there is something that's better, but hands down, I would literally say, and I buy some NASDAQ every month, right? So as your long-term easy without thinking money, put some money in NASDAQ. If you're down right now, you've been trying to do this investing thing, you've been picking all these stocks, it ain't been working out. It's because you're not picking the best stocks, because you're not the best at picking stocks. All right, so that's why I always start with NASDAQ. So that's the longer term view. All right, when I jump down to the day, all right, so okay, yeah, this is, if I'm thinking about it as an options trader, yeah, you should have, let's put it like this. A year from now, if you take a class with me, you just watch more of my lives, right? I hope you would have seen what I see very clearly and why I put a box around this day, right? It was multiple 5, 6, 7 different reasons to have believed, trusted, invested, put some money on the table, right? To believe that the market was coming down. So that's the swing trading view. We got long-term investing, that's holding stuff for years. We got swing trading, right? You might be in and out in a week. You might be in and out of a trade in 2, 3 days, right? Because with options, you can make 100% faster than you would think. That's all I can say. All right. Where's it at? NVIDIA. Try real quick. I got in late. Oh, I got in late. So I missed. I knew we were. I don't say I knew. I believe we still had room to go. I wanted a little pullback, but I didn't get it. I waited until we broke the low of this candle, which was support. This little hammer. We got under that candle. I knew it was clean sailing to down here, right? So what did I do? I got in at the bottom of this day. This day right here. And from here to this was literally 2 days, right? So this was what's today? Monday. This was Thursday and then Friday. I actually closed my contracts out Friday. I know if you like, no, but why you just leave them on until Monday? Yeah, because we popped up so hard, and I hate these gap ups that happen over the weekend. So I just, it was cool. But from here to here, all right, 2 days, very easy, simple, 100% return. All right. And once again, I was late, and I'm the person teaching you, telling you that the trade was up here. So imagine if I would have got in where I knew I should have got in versus down here, now still just trying to make some money. Why? Because the move was still live. I still knew the direction. All right. So there's you don't have to be perfect, right? But you do want to be super disciplined, right? So let's do this before I go. If I go here, I'm gonna take everything off my chart and just look at today. Let's look at today. 15-minute chart. This is NVIDIA. I'm gonna go back to NASDAQ real quick. QQQ. So this is what is classically known as a V pattern. Why is it called a V pattern? Because all it is a big aggressive V. Right? It's a new low, sharp, ton of selling, and then it's a new high, ton of buying. Right? It's like a beautiful baton pass. Bears killing it. And then by the end of the day, bulls killing it. You're like, wait a minute, how do we get both directional changes? We had a bullish and bearish market all within this time that the market was open today. This is why day trading is harder, because you have to recognize the trend is changing, change your bias, and be able to literally go to the other side. You can't stay a bull all day. You couldn't have stayed a bear all day. Why? Because you'd have started losing. You'd have been down by the end of the day if you didn't really know what the heck you were doing and you stayed in one trend direction all day. So once again, that's why the long-term investing, NASDAQ has been bullish for 12 years. Pow, simple. All right. If we go to day charts, you'll get a lot more back and forth, right? You'll get more directional trend changes. You try to day trade. The reason most day traders ain't making no money is because they don't have any technical skills and the discipline, the emotional discipline to match. You got to be like, you as a day trader, you got to be 100 times smarter and faster than your investor. You just do. Why? Because the time frame is faster. So you have to be faster with how you think. You have to process the information faster. That's all it is. That's all it is. And everybody rushes to try to be day traders when 90+% don't make consistent money. All right. My guy Charles Holland said today was a beautiful day in the market. Shout out to Charles. Charles is one of my. Now he's a smart guy, so I ain't trying to take credit for people's genius, but he's one of my. He was in my last options class, so I gotta say what up to people that know my flow, my view of this. You know what I'm saying? Here to learn. Don't have any active trades right now. That's what's up, Christopher Dino. I might be pronouncing it wrong, but glad you're here, brother. So let's do this real quick. Let's talk about today. How could you have, if we were day trading using the 15? I'm using 15 just because it's a little for what I'm going to do right now. It's just cleaner to show you this. I can go down to a 5 minute. I go down to a 1 minute. But if I go down to a 1 minute, you got a lot more directional changes in here. All right. The 1 minute, matter of fact, let me do this. Let's have some fun real quick. I can tell y'all right now, right in here, when the market for these 45 minutes pull back right here, this is when the 1 minute was in a downtrend. So if I go to the 1 minute and I find that, look at that. All right. 1 minute in a downtrend. All right. So, but if we go to the 15 is like, oh, this was just a small pullback, right? So that's why when you start getting into like, I want to make faster money. Okay, well, you got to use faster time frames. If you're trying to make faster money, you're not using a day chart, a month. You're not using all that long-term stuff. You're going down to the 4-hour, 2-hour, 30-minute, 5-minute. If you're really, really amazing, you on a 1 minute chart. But when I say it's hard, I'm going to say it's hard because it is. Because of the speed at which you have to think, make a decision, and execute. You can't get greedy on the 1 minute. You can't sit there overthinking it. You're going to miss the trade, right? So this is why, you know what? For all of 2022, now I ain't going to say all of it because I got some upcoming classes. I got a futures class coming up and another options class coming up. I'm gonna push my date back a week. I'm gonna get those started. 2 6-week courses. I was going to do the 15th of February, but I think I need to push it back a week. I'm gonna give y'all a little bit more time. Plus, I don't have like the official sign up stuff up yet. I meant to do that this weekend, but I was traveling. So yeah, that'll be February 22nd and 23rd. I'm starting 2 new live courses, 6 weeks with options, 6 weeks on futures. I learned futures first. Options is easier. Bread and butter should definitely be options, but for those of you guys who are just, you're doing well, you're experienced, or you just got some, you want to learn. There is a value to learning even beyond where you are, because at least you get more technical skill. I got to teach you more technicals in my futures class than options. You don't need all the stuff that I need to make money to protect myself with futures. You don't need all of that for options. Options literally is easier. But futures gives you that everyday. Futures is just powerful. You disciplined, ooh, you do some damage. You can do some major damage with futures. So let's do this real quick. I'm gonna put some information back on my chart. And all I want to do is show you guys this. Price today, NASDAQ at the open. Down here, squeeze was down. Price under the 20, under the 8. Price is down. We started off in a downtrend. Now, if you just, once again, if you just were paying attention to the last 7 days, we're under the 200. And then we gap down. So let me show you that gap down from Friday. All right, so check this out. Friday closed right here. We opened way down here. All right, put that on a 15-minute chart. All right, so look at that. We closed here. We opened way. Oh, actually, why did I put that line? Oh, I read it wrong. Yeah. So we gapped here. All right, so this was that gap. We didn't even try to fill this gap. Here's the funny thing. We actually did fill the gap by the end of the day. All right. If you were a day trader, you should have had this line. You should have had where the gap fill was. You should have had this line as a target. This should have been your target when this move started to develop as a day trader. But you got to get the direction, right? So let's walk back and go through how you should have seen this, right? So it's down, it's down, it's down, it's green, it's down, it's down, it's down, it's down, it's down, it's down. Uh-oh. Price closed back above the 8. So I'm paying attention to that. We closed above this little blue line, back above it. So what we're going to do from here, we can only go up or we can come down. We went up. Okay, cool. We got up here. We can only continue to go up or come down. When price continued to go higher, and we now have 1, 2, 3, 4, 5 blue candles, guess what? This indicator is now telling me I believe we are going to stay bullish. I believe we're getting the type of price momentum to stay bullish. This little indicator has said we are now bullish. All right. This indicator down here, it also turned blue, right? So it went yellow, lighter bar, lighter, right? So it's showing you down here, like all of this volume is slowly coming out. All right, down here. If I just focus on this down here, right? Look at that. This bar was less, right? So this is telling you, it's showing you the volatility on the bearish side coming out of the market. Okay, cool. But then price pulls back. But what does it pull back to? It pulls right back to the 20, which is where I started this whole thing from. On the month chart, it matters on the 15 too. All right. We pull back here. And just like NASDAQ on the month, right? If I do this real quick, if I go back to the month and I look and I say, okay, well, all Noble showed me was whenever we do this move to the 20, all right, back to the 20, then price really cannot start to escalate and get higher until all of those sellers for that month are cleared out. How do you know they're out? Because when price starts going higher, guess what? They got to now make a decision. Am I going to stay in? If you got in during this month, am I going to stay in now that we're higher? Probably not. You're going to get out. You're going to hit the buy button to get out, and new buyers are going to hit the buy button to get in. Everybody hitting the buy button, guess what? It pushes price higher. All right. So this exact same little trade here on the month chart is the exact same move here on the 15. Everything turned bullish. All these sellers were out. Guess what? We even went back here. We even went back to the high of the day. Look at that. Right here. I don't even know if y'all saw that. We literally went back to the exact same highest tick of the day. So anybody who was shorting today, by here, guess what? They were now losing or had no reason to stay in other than being greedy or just being, I hate to say, but being dumb, being a dumb bear. Right? Market had turned, price had changed direction. We pulled back to the 20. You had two targets. Technically, you had two. Right? What would be the two targets? One was just this last high. And then I think I froze up. So one target was that last high, last swing high, which was here. And then your other target would have been filling the gap. We got back above this candle. People started to buy. We rallied. We pushed back up. We went higher, 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 higher. We closed higher. And now if you're looking at this day candle, you're like, oh, wow. Maybe I should get in tomorrow because this is a hammer. Yep, it is a hammer. But it's a hammer with a whole bunch of big red volatility candles telling you that the market is bearish. Yeah, but Noble, can it flip right here? What if we flip right here? Yeah, we might. I don't know. We might. Is it possible? Yeah, it's possible. But what else is possible? This could happen. Uh-oh. My bad. Man, these freezers are killing me. Oh, they're just making me so mad. Because I care about the quality of this stuff. You know what I mean? So we had a hammer here, but we had not touched the 200, right? So this made more sense that we would come back. This hammer here, could this hold? Could in a day or two we get back above the 200? Could we actually get even more buyers in and get right back above this 20? Yep, it's possible. Yeah, it's possible. It's very much possible. But I'll tell you this, though. If I go to the week for just a second, the week gave me that one red candle. But once again, when we look back and try to find the last time that happened was COVID. Or what we're experiencing right now, is it a COVID level sell-off and scare? You got to factor in interest rates. You got to factor in some other stuff. I don't think it is personally. But what I can tell you is before I take my next long trade or buy calls, there's certain signals that I'm going to wait for. I don't have them right now. So the market for me right now today is down. And I'm thinking as an options trader. If you're thinking investor, right? I mean, shoot, as an investor, looking at NASDAQ, just NASDAQ getting close to the 20 was a great buy. So yeah, as an investor, I'm not worried about perfect prices. All right. And if we look at the history of NASDAQ, it really doesn't, like, the lowest it goes is the 20. So 3 months from now, if price gets all the way back above 4.8 and we're at 4.25, remember this video. If we get back above this big ugly candle, right, we only are going to get back above there and get all of the bears, right? All of those sellers will be then out of the market. All right. Today was crazy. Today was like Endgame. If you've seen Endgame with the Avengers, it was like gloom and doom. Everything's over. Everything's done. This is the worst thing ever. Oh my goodness. 9 days in a row, down 800 points. It was the worst. It was just, everything was bad. And then by the end of the day, it was that scene. It was when Captain America was beat up real bad. And he saw the little, he saw everybody coming. He saw the little the magic, Doctor Strange and his homeboy Wong. He saw everybody else coming. He saw all the bulls coming. And then he did the very classic phrase that we literally have waited, like, for people who are like true comic book fans like me, we waited like literally, years to hear Avengers Assemble. Avengers Assemble. And all it's the same thing with the market. It's like bulls assemble. When everybody says, yo, it's time to buy, that's when the market goes up. Right now, everybody's confused. Some people are thinking everything's on sale. I'm about to buy everything. Some people already are buying. If you pay attention, watch these guys on TV, women on TV, they give you a little, they tell you a little here and there, they give you a little, they like, yeah, we just, what did that one dude say today I was watching? He was like, what did he say? I think he was like, we're biting a little bit. We're biting Apple a little bit. All right. He's just like, he's buying some Apple. All right. That's all he was saying was he was buying some Apple. So that was Christopher. Somebody said, yeah, I have had a day where I overthought the trade and missed it. We all have. You can't be a trader and not say you've done all these things. Every trader's gotten greedy, missed some money, stayed in the trade too long, hoping it was going to turn the right way, hoping it was going to actually be getting profit at first. You've been in a trade where you were in profit, you got greedy, it turned negative, you lost, you got out. As soon as you got out, it went back up. You're going to experience all this stuff as a trader. You're going to. It's my job to try to help you to avoid as many of those mistakes as possible. By having good systems. And I think this year I'm finally going to do like a class on like the psychology. Pick a really, really great book resource. I don't believe in reinventing the wheel. If you need a book to just help with like the mindset, because it's all up here. Trading is all up here. I'm telling you, it's all up here. I don't care how much money you got, how little or how much money you have. It's all up here. You're either going to do the wrong things for the wrong reason and lose, or you're going to like really, really study yourself, be a student of the craft, have some systems, be accountable to somebody, your wife, your husband. Somebody should know if you're losing and making money. A lot of people lose in isolation. They do it in these little silos. They're scared to tell people. Ego. This is such a pride, ego-driven industry, and I hate it. I really do. Because most of these folks who are selling all these super expensive classes and all this crazy stuff, a lot of it is ego and pride, and they really can't teach, which is me coming back to these fake gurus yet again. Yep. One more time before I go. Somebody said, what signals are you waiting for? Elaborate on the signals. So here's the thing. I could say a couple different signals. And I'll give you one, right? Because there's no like one specific signal. I'll give you the most basic signal. Honestly, no, I wouldn't even say that. I wouldn't even give you the most basic. I'll give you a simple but advanced one, right? But what I also want to note by the question is when I do these lives, I know you're looking for information. I had to tell somebody I was talking to recently in a consult. We started off, matter of fact, it was a woman. She was really honest. We had a great conversation, really good conversation, 90 minutes. And she was like, Noble, I know so much, but I've been learning from too damn many people. I got your strategies in my head. I got Ichimoku clouds in my head. I got Fibonacci retracement levels. I've been right. So I say that to say, even when on this journey, you got to be careful about mixing and matching. You can't just get on YouTube and just Google something and just hop and find and take this and this and this and this. Like, you can, but I think it makes it a lot more complex. One of the few things I would say, just me personally, not me trying to sell you on signing up, because I literally, right, if you don't never do sign up with me, that's totally cool. Matter of fact, I want a world where people don't even need me. That's the goal, right? To make to share this type of knowledge and get it to enough people to take it serious enough, right? So that then schools and colleges bring people like me in to help teach their students. Because somebody should have been teaching me when I was getting my MBA and when I was at Indiana University. I could have learned this stuff 20 years ago, but nobody was there to teach it to me, right? So I say all that to say, as you go on your search for knowledge and information, be careful. Don't mix too much too fast, because that's another problem I run into a lot with people that I'm trying to help. I gotta clear out so much of the gook because this person taught you that and that don't work, and this one taught you this, and yeah, that's cool, but that doesn't work with this. Even just thinking about indicators, some indicators are designed, most of them honestly are not designed to handle volatility. What do I mean? Bollinger Bands, for example. I love Bollinger Bands. They're based on standard deviation, right? They give you a top band, a bottom band, and a midline. The midline is always the 20-period moving average because that's the regression to the mean. That's the average. Statistically, that's the average, right? So you're going to see a 20 on every Bollinger Band you ever would see placed on any chart. But Bollinger Bands don't work at all when the volatility gets higher than the norm. How do you know that though? Right? So Bollinger Bands are like perfect. They're amazing tools, but they're also terrible, trash, and worthless, depending on how well you know how to use them. Right? So I don't, people be in consults with me. I'm like, what do you do? Just tell me what you do. And they tell me what they do. And I'm like, you got 5 different indicators, all kind of not really, they're like the system you design doesn't even really work well. Your tools aren't designed to work together. All right. So long, super long answer just to say, I'm gonna show you better than tell you. Let's go back to Apple real quick. The question was, what's a signal? Like what's a signal that I look for? What's something I'm waiting for? All right. I'm gonna keep it real simple, super powerful, patient. But this is Apple, right? And you can see I got an alert to let me know when we get close to the 20. I mean the 200. We're not there yet. And I ain't gonna lie. I hope the market goes lower. No, I know. I should be a bull. I know I should be a bull. I should be rallying with the troops, with the whole world. But I can't lie. I do want the market to go a little lower. I do. I do. I do, because the move back up should be even stronger. But if I had to really quick on Apple, let's do this. I'm gonna take everything off my chart for a second. All right. And we have, matter of fact, I'm gonna even take these, let me even take those off. Where are those at? So I took everything off. There's nothing on my chart. Nothing. Matter of fact, wait, hold on. I even took that line off, right? I just want to make my alert the arrow. So what you can see is Apple has periods of downtrend, uptrend, ranging, going sideways. Kind of got some support right in here. Try to go down. Oh, big move up. Oh, we coming back down, right? So very classic, basic old stock. It's going to go sideways. It's going to go up. Sometimes you're going to have some down. You're going to have some down here, right? You're going to have some up, right? So most powerful stock in the world. Last time I checked, I know the market cap has come down because price is down, but it was a $3 trillion company. It'll be back up to 182. At some point, Apple is going to hit 200. I don't know when, but it will. The chances it won't they're ridiculously small, right? That we won't hit 200. So imagine if I just did this. I'm gonna add this one indicator called the Ttm Squeeze, and check this out. If all I knew was to wait until this squeeze fires, which essentially means you got a blue candle and a green dot, then I could have waited for that move. I could have waited for that move. Could have waited for that move. So right in here, this indicator is telling me it's not telling you that, all right, it's not 100%. So can you get a squeeze? Can you get this blue bar with the green dot and price fade and fail and you lose on the trade? Yeah. And you will at some point. Yes. But if I had to give one just simple, super simple, just be super patient and wait to know that a trend is highly probable. It's the math and what's actually working in this indicator, but that's literally all I would tell you. So wait until a squeeze fires. It's volatility, and it's volatility. it's actually two really dope indicators mixed. So right there and then right here, and then it took a second, but we finally popped, and then right here it went kind of off, and then it came back on, and then we got a really nice pop. All right, so and then if I had it for fun, let me go to Microsoft. I can do the same thing on Microsoft. If I go to Microsoft, I'm gonna go to the month chart. All right, check this out. I'm gonna go to the month chart on Microsoft. Let me take this equities, take the corporate actions off. Month chart. Look at this month chart. Month. When was the last time? So this was the recession. And right here, right in here, you got a squeeze fire. What happened after that squeeze fire? That was way back here at 30. We're at 350. The high was 350 earlier this year. Well, last year. All right. So Microsoft, over a longer term time frame, it's had the type of volatility to literally put it in a bullish trend for 12 years. It's the same indicator. Same indicator. So that's one thing I look at. There's several when you're talking to me, right? That can become a complex conversation. I'm trying to keep it simple. But that is one thing, I love the squeeze because I understand Bollinger Bands really, really well. And that Ttm Squeeze is a combination of Bollinger Bands and Keltner channels. So you got to really understand both of those to fully appreciate the beauty of the squeeze. It's an amazing indicator. Amazing indicator. Because it's just great math. It's just all of this stuff, y'all, is math. It's just math. That's all. Every time price goes higher, the average will get higher. It'll get further away from its average. Same thing when we're down. You're gonna get right. You're gonna cross over some moving average, and then you're gonna cross into another one. It's just the same stuff over and over, right? Cyclically. So. Let me go down here. So before I call it a night, any stocks you guys want me to take a look at? I'll give y'all 30 seconds to type a few in if you want me to take a look at any. And if not, that's totally cool. I appreciate you for being here. Thanks for joining me. I'm going to do this a bit more this year and get really, really, I'm kind of like slowing down after these next two classes to speed up. I got some really big goals for this year for myself. And I want to be able to do this for you guys weekly. So my guy Charles Holland said TSM. So took a second to pop up. So let me start here. COVID was here. I'll put a circle. We also came down and we touched. What did we touch? The 20. We did a regression. We regress, right? We come back, right? It's almost like, imagine each one of these blue bars. Dang. Okay, I caught that pause. Excuse me. Imagine each one of these blue bars being like, not only prices going higher, but this is just like excitement, It's energy. I'm feeling good, man. I have an amazing day. Oh my God, I'm having the most amazing day. And then I just, I'm like, how's your day? Oh, I'm cool. Right. So coming back to the 20 is just, its price is just kind of slowing down. It almost emotionally matches us, right? As humans, we get super excited the further away it gets. We get more giddy. All right. So TSM, Taiwan Semiconductor, has done really well. Another freeze. Oh, these freezes are pissing me off. Oh, they are so badly. So first thing I see is this. All right, hammer here. And let me say that for a second. I haven't looked at this like, Charles is the only person to ask me about it. I've never traded TSM, right? So I don't, it's purely technicals when I go back and look at it. But what I almost probably need to say that you probably can't even process is whenever I look at something, I instantly go back. I'm really not looking at right now. I always go back to see the story. And you see me do that when I kind of, I mean, like I literally did go back to the recession. I mean, to COVID. But even if I didn't start at COVID, I really don't start here with what's happening today, because today's only connected to everything else that's happened. It's kind of like, folks telling us to, stop thinking about worrying about having conversations saying America needs to address what happened with slavery. We can't just talk about today. You got to go back. Today is connected to everything that came before it. You cannot just say, no, look at today. Don't worry about what happened. You definitely can't trade that way. So how does it make sense in any other part of life, right? It doesn't. So the first thing I see is this. We had this hammer, and then we got another candle where we tried to break out and price got rejected really hard from those highs. So we're still in an uptrend. This entire time, we're still above the 8. We never really went under the 8, right? Which is great. That's a very volatile A plus. That's as volatile as it's going to get. I don't care what stock we're looking at, crypto, futures, foreign exchange, right? If it's all blue like that and we're just bouncing off the 8, it's volatile. It's a consistent, good volatility though, right? Because there's like a bad connotation with volatility. Like, I don't mean it's all crazy. I mean, it's actually pretty simple. The trouble with TSM though has been this. We got to stretch this all the way across. So we got all of these little bounces, right? So we virtually have been ranging since last January. We made a poke here. We tried to get out of this range. We bounced off the 20, pushed up, bounced back at 107 again. We pushed up, we bounced back at 107 again. We finally got higher. We went to 145, but the whole market is struggling. Nvidia, AMD, some of your other big semiconductors are down too, right? So that's the month view. If I go to the week, now knowing that we're stuck in that range makes a lot of sense. Okay, cool. Ttm Squeeze got all these red dots. These red dots mean we're ranging. Stop trading. We're not gonna go anywhere until we get some green dots. Got the green dot. Got a little bounce. And Charles, I know what you're probably thinking. You're like, well, these last few weeks in here, we made the new high. We pulled back to the 20. We're sitting right there at the 20. We just bounced off the 20. This candle looks really good if this was like Friday, but it's Monday. Right. So if I go back to the day, looks like we slowly bounced, got back up 145, made a real nice pushback down. Oh, we almost got back down to the 200. Okay, so yeah. Oh, yeah, okay. That's what I thought. I was about to say we probably just been bouncing back and forth a little bit over and under the 200 all this time. Yeah, that's all we've been doing. All right, so this entire range, we hit the 200, went a little bit above, went a little bit below, came right back up. Just didn't really have enough volatility to really move us, but we did get enough here. All right, we finally tried to make that move. We got to 145. Really sharp 1, 2, 3, 4, 5, 6, 7 days. So I'll at least say this, Charles. These last 7 days, very here's what's interesting to me. This 112 right here. This was the day NASDAQ pivoted and went back down. This thing went up, right? But we still had the same 1, 2, 3, 4, 5, 6, 7 days that mirrored NASDAQ. So I would say, because I know that you know more of what's in my head. Think about class, think about the core signals, right? We're already in a squeeze. It looks like this one isn't like perfectly correlated to NASDAQ. Some stuff is just like literally, if NASDAQ is down, it's down too. So it looks like this one, has a little bit of variability. I don't know their beta. What's this stock's beta? If I don't know the beta, it's a real quick little fun way. Just look and see how volatile it moved from like the lows of COVID to the high. All right, so that was like 230 some percent. Compare that to NASDAQ. NASDAQ went up 147%. So I instantly know it's more volatile than NASDAQ. All right, so its beta, I'm assuming, is at least probably like a 1.5 or higher. And you should know that because, of course, you trade. I mean, um, so I would probably just link it. If the market's going lower, it's going to come down. Right? It's going to come back right back down to the 200, which is actually a good thing. It's been in this range, man. Look at that support. It hasn't gone past 110, so you know where to like really turn bearish. It's still bullish. So apply the tools. We almost got the pinch. The 8 is still above, so it's pretty good. Just man, that range. I hate to say, but that range is so long. I would have probably been looked at something else. So I don't know if we talking about trading or we talking about investing, right? I should have asked you which one. But as a trader, a year of price being in a range, yeah, let's trade something else because it's not giving us the opportunity to really make money, right? So that's what I should have started off saying that. So that's TSM. I'm gonna do Amazon. Another day. So here's a tricky part with Amazon. Here's a tricky part with Amazon. Y'all ain't gonna like this. It's good and bad. The good, well, I'll take that back. No, I'm gonna just say the bad because it's really all bad. Right now in this moment, the bad is that this candle is fundamentally on the month. We're now under the 20. And if I had to do this, which I got to, right now, price, we had these little bounces. So we were like in a range here. All right. We were in this range from this candle right here, September of 20. That's 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12. That's almost 15. I can't stop counting. That's 15, 16 months. Right. So one, that's tough because that says something very important that you should analyze and think about. 16 months. And we really didn't ever get any higher than what is that? 35.60. We ran up to 37.50, 37.73, and then 37.50. So we tried 2 times. We tried to really get out of this range, and price got popped right back down, pushed up, right back down. So think about this now. Classic one-on-one price action. For the last 16 months, right? Buyers who would have had 1-year contracts on options, but I'm thinking more so like a trader in this moment. But whenever I see a price on anything that is under it's 20 on the month, that's why I always start here to get the biggest view. I'm instantly like, ooh. That's tough. That's tough and it's ugly. Why? Because if all of these buyers for these last 16 months have been slowly losing faith with Amazon, and I don't know what it's been doing based on its earnings. So once again, you should know this if you're trading it. But just looking at this right here, for me, is like an instant, ooh, that's tough, right? Because for 16 months, we couldn't go anywhere. So I'm thinking about the sentiment, the psychology of people who have been very deep advocates for Amazon. Right. Every time we got back up here to 350, you got super excited. And then less than a month later, you're right back inside this range. And now we're virtually closing under that range. Right. This month isn't over. So let's say, I don't know, say by the end of the week, we push up for 3 or 4 more days, right? Then we're still inside this range. So then we've bounced out of it and we've pushed under it. That's tough. That's a waiting game, right? It's a waiting game. The good thing, what I say was a good thing. The good thing is you got these little red dots down here. So when you have those red dots, usually it's telling you, hey, volatility has slowed down, which generally speaking, right? Generally speaking means you're not about to get a big trend down. You're not about to get a big trend up. Right. So the good thing is based on what I'm seeing, we probably aren't going to get a ton more of selling. All right. But because you got to layer that in with this range, so I'm using the technicals, but I'm also thinking through the price action and psychology of the market. We've been in a range for 16, 17 months. Right. So that's tough. That's tough. That's just, it's been beaten up on. Right. It hasn't been doing what, Yeah, and I know already we were under the 200. All right. So if I remove that, so the little bit of support we did have, which I probably would have just been like, okay, well, basic old trend line, right? Bounced off of 3,200, bounced off 3,200, 3,200, right? So we kept bouncing off 3,200 to 37. Really 3,200 and here, right? These were those last swings. So we were at 3,450, 3,200, right back up to that 3,450. Pushed it, couldn't do it, came right back to the same area, right back to 3,550 again, right back down to the same price, right back to the same high. Tried to go higher. Oh no, came back to it. Got a hammer there. Same day at that low support price, pushed up for 2 days, and just like NASDAQ on the 12th, that was it. Right. For that move, for these 7 days, right? So once again. But right now, we're bearish. I know we had this one day the market is like, hey, everybody's like hopeful, but it's more than likely not over. Whenever you think it's the bottom, it's usually not. Probably like 99% of us cannot perfectly call the day that will be the bottom. So yeah, it looks like it's the bottom is today, but I don't think it is. And the question would be, if I back down just a little, actually, let me go to the week for a second. Actually, no, I'm gonna go back to the month. So here's the tough part. Here's what nobody really wants to say. I'm gonna say it, but it's gonna scare some of y'all, but I gotta do it just to say it. We could very easily, if this sell-off continues on stocks like Amazon, we could easily come back here. All right. Why am I coming back there? Because that's the first month really kind of outside of COVID. And then I would actually even say here, all the way down at 2,200, because that was the high before COVID. And I know it's like, oh, yeah, but are we going to get way down there? Could that happen? It's just the could it happen? Yeah, it could happen. And why? Because if I show you examples like Netflix, look at Netflix. Netflix just did it. Full retracement all the way back down, right, to the candle that made the, right? So we hit the 20, got above, hit the 20. I've been talking about the 20 all day. The candle that literally was COVID on NASDAQ. I mean, on Netflix, right? That started that entire move higher for all those months. We just retraced all the way back. So we just erased 22 months of gains on Netflix, which is really tough because that honestly means we could go back down to the COVID lows on Netflix. We could be back down to 300 in a month. So far, not a ton of data. I ain't gonna lie. I usually stay away, me personally, from stuff that's like pretty new because there's just not a ton of information. Right? That first year is a wild ride. You really don't know. I don't care what the stock is. Everybody was super hype about Facebook, one of the biggest IPOs in history. First few months, Facebook IPO. Let me show you real quick. Facebook IPO. What did it do? First 3 months, lower. It literally right as soon as it opened, 4 or 5 months, it went straight down. Then it did pretty well. But even if you waited until, okay, you knew it was bullish, it's above the 8, it's above the 20, and then you had this candle right here that pulled back to touch the 20. Even if you waited all that time, the first 3 years until here, guess what? You still pretty much caught, right? So you guys don't have to be, like with these IPO stocks, that first year, I mean, I get it. But that first year, honestly, it's It's anybody's guess as to what's going to happen. You're dependent on a lot of fundamental information, hoping and believing that one, the company was ethical in its financials. Two, it actually has the leadership you believe it has, right? And then three, it has to actually do what it should do as a company, manage its business well, right? Have some good earnings, A, B, and C. Dominate. You want it to win, but the first year you really don't. So anyway, so you know that with SoFi, so it's been dancing. It's been bouncing off of like this 13 area. We came right back up here to 24. Came right back to 24 right there. You should see that. Right. Stuff like that, it should just scream. You should see it because it's part of the story. If I go to the week, we just been ranging. We've been ranging. Got a little cross. We tried to go up, got a little squeeze, and then it faded. We went back to the same place. We didn't have enough buyers. We didn't go anywhere. Came right back down. I think last week it was something people were waiting on last week. I don't even know. I do know, but I can't remember right now. Plus, I'm hungry. So we're under the 200. We came back to test this low that we made, this 11 or just say $12. But I mean, we're still in a downtrend. So, yeah, I know some people caught this little quick pop. Yeah, that's a quick pop though. All right. So it's technically on the day in a downtrend. On the month, we're really just ranging. We are inside of this candle right here. We're inside of, matter of fact, we just touched the low. Check that out. Look at that. Today's low was this low of this candle, right? Of last year. So once again, we're in a really, really long range. And these lows are kind of getting lower. I mean, we tried to get up. We got to 28, pulled back, pop back up 25, back down to 13. Right back up to 25. But this time we went even lower than this last swing low. So, yeah, I mean, it looks like we got some support clearly at this bottom. But if we get under 12, which is very, very possible in this market, yeah, it should come down along with everything else. And I got to do this before I exit. I should have started here. Oh, I know. The VIX is so important. This is the volatility gauge. So, I'll end with this one. Here's the thing. Here's what scares me about the VIX. I won't say scares me. No, I won't say scares me. It's a volatility index. It measures the S&P contracts being bought on the S&P. Directly, it's measuring the S&P because the S&P holds like the 500 companies in the S&P basically account for 85% of all market cap of all the companies in the stock market, right? So that's why the S&P is so important. I know I use NASDAQ a lot, but the S&P is that benchmark because it literally accounts for 85% of the stock market. The 500 companies in the S&P are 85% of all the market cap, all value. Market cap is just value. If I wanted to buy, if I literally wanted to write a check to buy Apple, how much is it? Technically, minus debt and yada yada, it's the market cap, right? The total number of outstanding shares multiplied by the stock price give you a value of the company. It's a $3 trillion company, a little bit less now because of this pullback, right? But S&P, 85%. Those 500 companies, they matter, right? So the VIX directly measures, it's called the VIX volatility index, right? It directly correlates to 30 days forward looking options contracts on the S&P. Everybody gets scared. Guess what? We start hedging. You start buying puts or you start short-term buying puts to make money in the down. The VIX is measuring that. When we start seeing a real big spike on the VIX, right? So when the VIX spikes, right, today it looks like we got back up to, looks like we got up to like 39. We really didn't hit 39 perfectly, but 39 got close to it. Then here's what would be fun for those of you guys who really want to dig into this stuff. Go back to this week, the last time we hit it, which was January 125. That week and this week here, all right, which was 1026. Go back and look at the S&P, NASDAQ, or your favorite stock. The last time we got to the same place we got to this week. And then you tell me what happens. This type of stuff you got to do. Like, this is what I spend time on the weekends doing. Like, this is what real traders are kind of doing on the weekend, right? I'm not just looking at something to try to figure out what's happening right now. I'm like, okay, we hit 40, right? I know what that means. When the VIX spikes, it means everybody's really scared. It also correlates directly with price. If you go back and look at the lows on the S&P, it's when the VIX spikes. So keep it real simple. When the VIX spikes, usually that's when price goes low, and in a good market, that's the time to buy. But markets do have recessions and corrections, right? So what you got to be careful for is when this happens, can the VIX go higher? Yeah, the VIX can go higher. It can get more volatile, and that's more loss. That's prices going lower and lower and lower and lower and lower, right? So that can happen. So yeah, so for fun, look at once again, find your favorite stocks and go back. We got a VIX spike to the 40. We didn't get to 50, but we got to 40. It's pretty high. It's high enough, right? Clearly, right? It's high enough to have these days. Every time we have these big bad days in the market, the VIX is going to be at 30, 40, 50. It's just right. It's actually not that exciting to me because it's very cyclical. It happens all the time. You just understand the correlation. Okay, cool. Right. So you either made some money on these last 7 days, you saw it coming, or you just been patient. Your long term stuff been taking a hit, right? And you kind of like, okay, let me just kind of relax, depending on how much skill set and discipline and money you got, right? But for fun, yeah, go back to the last 2 times we got up to that 140, that 40 area, which was January 25th, the week of January 25th, the week of 10/26, October 26th. I might as well include this one too. We didn't get as high, but I mean, we got a little spike right here. That was 11/29. So 11/29, January 25th of 2021, and then October 26th of 2020. This is how you learn how the VIX works. You got to put these little circles, find the dates, and then go back and look at the S&P or look at Apple. What did Apple do when the VIX spiked? Right? Those probably on Apple, hands down, were great buying opportunities. Right? That's just because I've been trading Apple for a while. I know Apple like the back of my hand. But yeah. Okay. It's about an hour and 48 minutes. So I'll end here. Thanks for watching. If you want more information, just on what I do, who I am, my class is what I offer. Go to limitlessclass.com. I should put it up. I'm not even gonna pull it up. I ain't gonna do like some hard sales pitch. I do one-on-one consultations if you need some help. If you need a really great options course, or you want to get into something a little bit more that requires more technical skill, I would say. You can make and lose faster money. You're not gonna master it overnight, but if you want to get and grow your skill set this year, you're ready for that. I'd love to see you in my futures course. If you go to limitlessclass.com, put in your email address. I'll make sure you get the emails when the class is actually live. I'll have that sign up registration pages and everything ready like real soon. So that's about it. Thanks for watching. Have a great evening. I'm about to eat this cold soup that I gotta go warm up. But thanks for joining me. I had a blast. We're gonna do this a lot more this year. So stay tuned. Follow me on all your YouTube, Instagram. Talk to y'all later. Have a good night. Trade well tomorrow. If you do trade with discipline, and trade a plan. Make sure you're trading your plan. That's super, super important. I don't care what that plan is. Just make sure you follow it. Right? You want to build that discipline. Every trade. No chasing. I know my homeboy, my homegirl told me no. Do you know why you're taking that trade or buying that stock? Right? Got to build a skill set. Okay. Talk to y'all later. Peace.